Where do I sign, sir? Here's my card.
Caesar. Is he trading a news event there, I guess?
Fair play to him. Go on, Nick. Welcome back to another episode of Alpha Reacts Part 2.
Yep.
Should we watch a few videos?
We'll watch a few more. That was fun.
Or car again. I'm joking.
Days where, let's say, I make 100 grand a day, people go, oh, well, he made 100 grand in 2 hours. I mean, it's not 2 hours, it's 10 years. It's like same thing when you see boxers like Mayweather. He goes into the ring for 36 minutes or whatever it is, and in that time period, he makes 100 million. And people go, oh, he made 100 million in 36 minutes. I'm like, no.
The thing with that as well, you've probably seen it before, the iceberg analogy, and it's usually like success, and it's like what people see, it's just the tip of the iceberg, and it's like, you know, your wins and, you know, whatever you've got to show for it, and then underneath is this massive piece of the iceberg.
But it goes back on
experience, years, the
but
discipline.
Again, who you should be listening to. This man, for what I know, and I don't know much of him,
there's
just
very
from what
few
I've
in
heard,
the space.
He is real, credible, backed up, in black and white, verified. Listen to those that are verified. The other ones, they're not verified, so.
He's been training his whole life on building his brand, on training, and being able to be at that stage, to have the opportunity to make 100 million. It didn't just happen. He went in for 36 minutes.
Yeah, 100%.
Yeah, there's no overnight.
Great, smart, Forex training on TikTok.
At that point, you will notice that
what are you trying to do to me, guys?
Okay. There is an obstruction somewhere here. There's a level in here. You see that it came here, it drops, right? Okay? Do you notice that? Here. So the market keeps on making.
Where do I sign, sir?
Okay?
Here's my card.
Coming downwards. But there seems to be a level in here, horizontal resistance here, where the market just can't break.
Maybe it's just a language barrier, but that's definitely.
Day traders have it all wrong. They see the market run up, they sell it. It comes down, they buy it. It runs up, they sell it. It comes down, they buy it. It runs up, they sell it. And then, whoa, prices take off and they sell and they lose money all the way up, not realizing the only way you make money in the market is to catch a trend. It doesn't matter if you're a day trader or a long-term trend trader. Trend is the basis of all.
Trend is your friend, as they used to say.
Now, we also know this, if you study your charts, you'll see that all large range days, or almost all of them, close at their high or close at the low. So the most successful day trading strategy is to hold to the close. Don't try to dance in and out, because when you have a loss, you're gonna have a big loss. Try to catch a trend move, hold to the close, and you're gonna make.
I said it in the video before this. The traders typically make more money in a range-bound market, one that's respecting its levels. As soon as it breaks and flies, that volatility is what catches traders out. It hits their stop loss. They move the stop loss because it's flying and they want to catch it. They don't want to close the trade.
But that is the beauty of having a stop loss in a range-bound market, because some people won't use that.
Yeah, you think if it breaks that level,
it breaks, it's invalidating the trend anyway. So yeah. Next.
Left. 10 seconds left here now, boys. 10 seconds left. I reckon it's going to spike and drop.
We're doing binary options, so.
Wow. This is wild. Big move.
One thing about the live streaming trading, I do think that is good, because that shows you, instead of a snapshot, a 30-second, I mean, this is a clip, but if you was to watch the whole live stream that he's doing, or 30-minute stream that he's doing trading, you're seeing the whole picture around that, entering the trade, exiting the trade, kind of, you can see his face, you see his emotions throughout the trade. But a clip on Insta or TikTok where it's a 30-second win, you don't see too much.
I would get more enjoyment just going.
Oh, wow, look at that. Almost got activated. Here we go. 3, 2, 1. It paused. Big move coming. Oh, no. Wait, 50. What the fuck? Oh. What the fuck?
Is he trading?
What the fuck, Caesar?
Still holding. What the fuck, Caesar? Is he trading a news event there, I guess? I mean, that's just a lesson to
I mean, some people get their fun from different things.
I presume that's a news event. He's waiting for the release. He thought it was going to be long. It's come out, he's hit by it, and the market's tanked. Red, and he's cut them as quick as possible. I mean, I couldn't see how much he's lost, but that was probably the quickest way to lose 10 grand, 5 grand. I presume you put a big position on that. Here's our friend Wakar.
The reason I find trading so lucrative, and it's an opportunity I chose for myself, is because I look for leverage in anything I do. What that means is I'm looking for disproportional growth compared to my efforts. For example, life is usually inputs and outputs. I input my time and I get paid for my time. I train in the gym and I get better in shape. But trading is not the case, where your input does not directly match your output, because as time goes on, your output gets exponentially bigger and bigger and bigger, because you're working on the leverage of skill. Because as you get better as a trader, your returns get bigger, and as your account gets bigger, the same input, the same trades, the same effort can exponentially grow, because your 5% on a 100k account versus 5% on a 10 million account is vastly different. So when I see this disproportional leverage, I see this as a good opportunity.
Yeah, I think he's right, but I think that goes with anything in life, you know. Yeah. It's like what that Umar Ashraf was saying before, is the more time you put in, it's like a business, you know, or anything. Eventually you're going to bring staff in, you're going to train them up,
you're going to grow.
They're going to run that. So leverage for me is time. Leverage is time. If you've got more time, you've got more leverage.
You're in a different ballpark from when you do level up from 100,000 to of your own personal cash. You go from 100k in the market to $1 million in the market. Putting risking 10 grand or 50 grand every single trade, as opposed to a grand or 5 grand every single trade, puts you in a different ballpark. So you. Not only has your skill got to be able to take you up there, you've also got to learn the discipline, the psychology. You've got to have the gut to stomach.
I think when you start,
I've seen it before. There was a video on if you was to pull cash. If you've got a live account and you've got, let's say you're going to put £1,000 on is your risk every position, but you actually take £1,000 in cash and put £1,000 on the table. You can physically see that how much you're risking for people that. Maybe start to just punt and throw around and forget that it's just, you think it's just dummy numbers on the screen, but it's cold hard cash.
Check me at a strip club. I know this one. This is funny as fuck.
Oh, here we go. Another
format. Here we go.
Institutions are going to continue to destroy you.
NLC trading.
You insist on being liquidity and you're playing the game wrong. Check this out. What do most retail traders see when they look at this? They see a rejection. They see another rejection. Oh, this must be resistance. What do they want to do? They want to short the market here. Let's say they enter here. Where are they going to put their stop loss? Slightly above. Let's play this out. Oh, wow. Look at that. Stopped out immediately. Now, they're in their head. Okay, a bullish engulfing right above resistance. Must go long. Okay? Boom. I had my direction wrong the first time. Let me switch it up. Put my stop loss below here. We enter off this bullish engulfing above resistance. Let's play this out. Boom. Stopped out, right? And the reason being is because this is liquidity. All institutions wanted to do was create liquidity for their orders. Then they'll allow the market to go in their favor. Don't be liquidity, okay? The reason why you keep getting cooked in the market is because you keep doing the same shit that everybody else doing. If 99% of people fail, why do you think they fail? One, the strategy sucks.
He's got a point.
Your psychology is all fucked up. Because things like this happens to you.
It's good content. It gets people into trading. It gets you stopping. But I just think that
it's
trading with tiny.
It's a sales pitch, though.
It's a sales pitch
you to
into
get
his group.
And fair play to him. It does make a lot of sense what he's saying. It is what he's saying is right. This does happen. But you can't judge the kid from doing this. He's just trying to hustle. Fair play to him. Go on, Nick. Keep pushing forward. Definitely don't wear your hat backwards, though. That's a bit backwards.
If you want to be mind blown, then watch this. I can probably tell you when this weekly candle is going to make high of the week and low of the week. I base it all around the economic news calendar. Let's bring this into real chart format. This section here is 1 week's worth of price action. This green box is Monday. We had no news. On Tuesday, we created high of the week in line with high impact news. Wednesday was an expansion lower, which was in line with this high impact news. Thursday creates low of the week in line with high impact news. And Friday was a reversal day, which again was in line with high impact news. So what I'm basically saying here is at the start of the week, you're going to create a high or a low of the week. At the end of the week, you're likely to create high or low of the week, opposite to what was created at the start of the week. So if you go with market structure and you're able to identify key areas on a higher time frame where you anticipate price is going to reach this area and reverse and target key levels of liquidity lower, giving you a bias events. You can basically look for news events and find out when you're likely to reach those targets and what you're likely to do for the rest of the week. This is an absolutely incredible way which is going to help you determine when the high or low of the week is going to be created.
Yeah, I mean, decent video. Showing fundamentals, news moves the market. High impact news.
And there was a lot of that week.
You've got to look out for it. Yeah, you're going to have a volatile week. A high impact news release is going to push the market. If it's range bound throughout the week, a high impact news, some big volatilities will create a high or a low. So you've definitely got to watch the calendar. But
there always used to be a saying, didn't there? They're not planning. Was it turnaround Tuesday or turnaround Thursday?
Thursday, I'd imagine.
Turnaround Thursday, where it used to be everyone in the city used to go as a trend, and then you go like turnaround Thursday, and then it just flips it on its head. There used to be the BOE minutes, didn't it, as well?
Yeah.
On a Thursday, turnaround Thursday, yeah.
I think that's the lot. Yeah, they were good.